Welcome to the Daily Business and Finance Show. Power moves and market surges. Solid Power's $50 million repurchase, Alibaba's $200 million stock boost, and Plug Power's $1.6 billion DOE loan. 3 million faces a plunge amid disappointing earnings forecast while Verizon rides high on wireless growth. AI revolutionizes news industry. What changes to expect? Dakota Access Pipeline stays open despite controversy as Energy Transfer stands firm. Realty Income seals the deal with Spirit Realty Capital merger, and Netflix celebrates best subscriber growth since pandemic onset with revenue beat. Stay tuned after this short ad break for an in-depth look at these headlines. Solid Power has made an announcement that its board of directors has given approval for a buyback of up to $50 million worth of the company's common stock. The expiration date for this buyback program is set for December 31, 2025.
Alibaba shares experienced a 7% increase following news that co-founder Jack Ma and chairman Joe Tsai have purchased more shares. Despite the company's share value plummeting by 38% in the previous year, Ma invested $50 million in Hong Kong-traded stock, while Tsai acquired $151 million worth of U.S.-traded stock. Currently, Alibaba's market capitalization is at $172 billion, lagging behind its competitor PDD, which stands at $187.8 billion. The tech behemoth saw a reduction of about $20 billion in market value after it called off plans to spin off its cloud intelligence group due to U.S. export restrictions on advanced computing chips to China.
Shares of Plug Power experienced a 12.3% increase after CEO Andy Marsh announced a loan facility worth $1.6 billion from the Department of Energy. This funding is intended to support the construction of up to 6 hydrogen production facilities. Even with a hiring freeze and potential price hikes, operations have commenced at their plant in Georgia, which is currently the largest electrolyzer in the U.S. Additionally, another plant, part of a joint venture, is anticipated to begin operations in 2024.
Shares of 3 million experienced an 11% drop on Tuesday, which is the most significant decline in close to 5 years. This downturn comes after the company's earnings guidance did not meet Wall Street's predictions. Even though the fourth quarter revenue was lower than anticipated, 3 million surpassed consensus estimates for adjusted earnings per share. The chief executive officer, Mike Roman, emphasized robust performance throughout 2023 and continuous restructuring endeavors.
Artificial intelligence, also known as AI, is poised to bring about a revolution in the media industry. Leading this transformation are services such as ChatGPT and Claude.ai. However, the licensing agreements required for using AI with content are intricate and have multiple layers. Media giants like the New York Times and News Corp are currently navigating these complexities. They're taking into account various factors, including licensing of archives for training AI, licensing of recent news content, and non-news content verticals. Both these companies already have deals in place that could potentially set a value baseline for future agreements involving artificial intelligence.
Kelsey Warren, the executive chair of Energy Transfer, expects that the Dakota Access Pipeline will continue to function even in light of a court-ordered environmental assessment. The pipeline, which spans 1,100 miles and transports crude oil, has been examined for possible environmental consequences. Local Native American tribes have expressed concerns about potential risks associated with oil spills. However, Warren maintains his belief that the operations will not be interrupted.
Shares of Verizon experienced a significant rise, soaring over 6.5% following the announcement of their fourth quarter revenue. This exceeded previous estimates and was primarily driven by a 3.2% increase in wireless service revenue, which amounted to $19.4 billion. In addition, Verizon gained 1.46 million retail postpaid customers. Even with a minor decline in total revenue, the company managed to add 413,000 broadband subscribers. They are now on track to achieve their target of having between 4 and 5 million fixed wireless subscribers by the end of 2025.
Netflix's fourth quarter earnings report indicates a 4% increase in stock, marking the largest customer gain since the onset of the pandemic. Global streaming memberships witnessed a rise of 12.8%, reaching 260.28 million. Revenue also saw an upswing by 12.5% to $8.83 billion, exceeding projected figures of $8.71 billion. Despite experiencing a slight decrease in operating income, the fiscal year's operating margin reached an all-time high at 21%. The company foresees continued growth as streaming services expand and is planning substantial investment in content.
Realty Income has completed its all-stock merger with Spirit Realty Capital. The shares of the newly formed entity will now be traded under the ticker symbol O on the New York Stock Exchange. In addition, Spirit Series Accumulative Redeemable Preferred Stock has been exchanged for an equivalent stock from Realty Income. And that's a wrap for today's The Daily Business and Finance Show. Stay savvy, stay informed, and we'll catch you on the next episode. Until then, goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow dawns, take care and goodbye for now.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.